Good afternoon, trader friends. Hello to FX Street friends. Welcome back to session number 6. I'm Jennifer, and I'm presenting to you my MACD trading series. And I've prepared a lesson today to show you a couple of new techniques. So we'll jump right into it. Remember, I'll take questions at the very end if there's anyone here that has questions. And if there's anyone watching the recording that has questions, don't hesitate to send me an email, combotraders@gmail.com. So, okay, we'll jump over into my presentation and get right into it. Share my screen. And we're off. Okay. Welcome back to my presentation. This is the agenda for tonight's session. Tonight is going to be, we have a lot to cover tonight. I'm not going to say it's a long session. I'll try to keep it right on track and right on time. But I have two really important MACD strategies to share with you today. The first one is the MACD or the Monday trade, and it's special because the beginning of the week signals are special. And I'm going to tell you about the Monday trade setup. And I'm also going to tell you about the MACD close, which is another MACD technique, sometimes a stop loss, sometimes a profit target. And there's actually a lot of different ways to use the MACD close. So that's what we're going to cover tonight. And we'll start off talking with you about the Monday trade hopper. The Monday trade is just a hopper, but it's a special one. When the MACD hops over zero on a Monday or a Tuesday before midnight, on a 4-hour chart, it's called a Monday trade, and it's good for 100 pips. Now, the kind of funny thing is I don't even trade on Mondays usually, and I know that I have some explaining to do about that because I am the one that created the Monday trade. So I'll start from the beginning. When the MACD makes a move over zero, it's called a, you should have this down by now, it's called a hopper, okay? And you remember from lesson number 1 in the series that the hopper is the MACD making a statement about momentum and direction and about change in the current market condition that's happening right now. You remember the hopper says nothing about the potential or duration of the trade setup. It's just a signal about change, momentum, direction, might be a good time to trade. But what you don't know is there's an exception to that rule. Have you ever noticed that sometimes the market starts a move at the beginning of the week and there's a lot of follow through on that move well into the week? I've heard some people call it a trading week when the market produces a run on trades in one direction, or a non-trading week if you find lots of choppy, sporadic market activity that produces small trade opportunities at best. And I'm sure you wouldn't be surprised at this point if I told you I have my own way of estimating such potential at the beginning of the week. I would agree that sometimes at the beginning of the week, there are opportunities, or we might want to call them hopportunities. Opportunities to trade with a larger than normal expectation about the potential and duration of the market move. So here it is. When the MACD makes a hopper at the beginning of the week on a long time frame chart, we can expect the market to hold that position for a length of time. How long is a length of time? Well, for me, it's approximately 100 pips across the majors for the most part. 100 pips is my conservative target when I get a Monday trade hopper, which is a hopper that happens at the beginning of the week on a long time frame chart. Now, there are no laws about these things, of course. So if momentum slows down early, what should you do? Well, you know my answer to that is close the bag. As soon as you have some profit in the bag, you've seen momentum slowing down, just get out of there, take what you can get. But for the most part, I'm looking for about 100 pips across the majors as my conservative target. The Monday trade hopper can happen on a Monday or a Tuesday. So let's review the definition of the Monday trade. It's when the MACD makes a hopper at the beginning of the week on a long time frame chart, and we can expect the market to hold that position for a length of time. So first of all, Monday and Tuesday are the beginning of the week, but there's another reason I include Tuesdays in the Monday trade setup. It's because I normally don't trade on Mondays. So, you know, I don't trade on Mondays, but when a hopper happens on a Monday, it has a great deal of value to me because I know that if the MACD holds its position until I get there on Tuesday, there is a solid chance that I'm going to get that easy 100 pips out of my trade. At this point, you might be wondering why I don't trade on Mondays, and there is a reason that I don't trade on Mondays. I've developed an opinion and maybe even a little bit of an attitude, but don't discount me yet. It stems from solid experience with trading every day of the week and keeping track of what happens, particularly on Mondays. So here it is. The great majority of the time, when the market moves on Monday, it's right back where it started come Tuesday morning. So does that make trading on Mondays wrong? No, of course not. But I personally would rather not hold on to an open trade when I know I can probably get that same trade on Tuesday morning when the market might be a little bit more ready to move. So here's the thing about the MACD. If it makes a hopper on a Monday and price moves around a bit and ends up right back where it started, chances are the MACD line will normally hold its position either above or below zero for that hopper, all the while price is jumping all over the place. So what do I miss by not trading on Mondays? Normally, nothing. On Tuesday morning, I checked to see if there were any hoppers, and if there were, I know that the hopper that happens at the beginning of the week on a 4-hour chart has a very good chance of holding that position for 100 pips, and it's mine. Now, I'm not saying you can't take the Monday trade on Mondays. I'm just saying that a lot of the times I don't take them on Mondays because I typically don't trade on Mondays. But the thing about Mondays is if the hopper happens, even on a Monday when I'm not there, and that trade setup is still in the correct position, chances are still going to be really solid that I'm going to have an opportunity to get that trade with the bigger potential and the bigger expectation about duration and look for 100 pips. So add the Monday trade to your trading portfolio. The Monday trade doesn't happen every week. It's my signal that we have a special week when I see the hopper at the beginning of the week. And I get pretty excited about it, as you probably will too, right at the end of this webinar. Next Monday, you're going to be looking for a hopper at the beginning of a week on a long time frame chart and seeing if you can pull out 100 pips out of the market. So I have a question for you. Would you be happy if you could get one Monday trade per month? Just think about that. That's 100 extra pips per month just for taking the hopper on Mondays. I mean, that's a trading strategy right there all by itself. And I actually have some clients that don't take anything else except for the Monday trades. Well, there is a problem. Usually when there's one Monday trade setting up, there are several Monday trades setting up across the majors. So you might even get 3 or 4 all at the same week, all on the same Monday or the same Tuesday. Now, do you still think you're going to be happy with just one per month? So the problem is that the majority of the time, this isn't the problem, but the majority of the time, Monday trades produce a profit. But occasionally, the MACD line is going to roll over zero against you, and it will end that trade with a relatively small loss. The losers are well worth the many more times that this setup produces a winner. So you have to try it out for yourself and see what you like, but think about that before you take 4 of them all on the same Monday. All right, so of course, I have a button for that, the Monday trade button. When you click on it, and it'll only allow you to use it on a Monday or a Tuesday. If you click on it any other day of the week, it'll just give you a little message that says wrong day. So when you click on it on a Monday or a Tuesday before midnight, it looks back to the beginning of Monday. And if a hopper happened, it will open the trade and automatically place a 100 pip profit target. As soon as that trade opens, it will then turn the MACD close button, which I'm going to tell you about next. It'll turn that button on, which will close this trade automatically if the MACD hops back over zero against you. So that's the stop loss. You get into the Monday trade right when the hopper happens, 100 pip profit target, and if the MACD rolls over zero, you're out. Just no discussion. This button only works on Monday or Tuesday before midnight chart time, and it only works on the 4-hour charts, because remember, the Monday trade is special at the beginning of the week on a longer time frame chart. So I thought I would just show you a little example of what some of these trades might look like rolling out back to back. In this chart, you can see we had a Monday trade that was good for 100 pips, followed by a reverse trigger finger, which we talked about in a previous lesson. For 30 pips, we had another Monday trade that closed early for 45 pips. We had a reverse trigger finger for 30 pips. And this is just a demonstration of using the buttons to pull out trades with the help of the MACD, and also making them happen automatically, because as easy as that looks, when we're looking in hindsight and the chart is all labeled, in real time, you're sitting there waiting. And I like to trade on the 4-hour charts, and so those 4-hour bars can really take up a lot of your day. But the button will do the waiting and watching for you so that you don't miss it. So before we move on to the next segment, let's just quickly review the Monday trade. Why is a hopper at the beginning of the week special? That was a pop quiz. That was a question to make you think. The Monday trade, when the MACD hops over zero at the beginning of the week on a long time frame chart, it has a good probability of holding that position long enough for us to capture 100 pips. Sometimes the market starts a move at the beginning of the week, and there's a lot of follow through on that move well into the week. So the beginning of the week could be a Monday or a Tuesday for me. No matter what kind of choppy price action the market produces on Monday, if the MACD is unfazed by it, holding its position either above or below zero for that hopper, then we have a chance to see it and take the Monday trade even on Tuesday morning. So that is the review of the Monday trade. And next up, I'm going to tell you about the MACD close. The MACD close is a very cool thing. Win or lose, when the MACD line gets back to zero, you close your trade. Sometimes that's a profit target, sometimes that's a stop loss, sometimes that holds you in a trend trade, and sometimes it produces a really nice early exit on a trade that isn't going to work out for you. For example, it could be the early exit on your Monday trade. The MACD close, it's just more good information from the MACD. No matter what you're doing, when the MACD gets back to zero, it's bound to produce excellent information to serve you in all your trading practice, whether you're getting ready to take a new trade or getting ready to close one that's already opened. So think about what the MACD is doing. Do you remember the job of the MACD, what it's doing? It's watching price action via two moving averages, a fast line and a slow line. When the fast line bolts away from the slow line, there's change in the current market. When there's a decreasing amount of change in the market, the fast line fades back towards the slow line, the MACD fades back towards zero. So what I'm trying to say here is when the MACD line crosses zero, whatever was previously happening, whatever the market was previously doing is over. It's over. When the MACD line crosses zero, whatever it was previously doing, whatever was previously happening, that is over. Excellent, excellent information to easily capture from an indicator that is freely available and sits right in the bottom of your charts. All right, so when the MACD crosses zero, produces a hopper. The information we gain is that some new move is happening in the market, and we hope to see it follow through on market decision to move into that direction. So what happens next will be one of two things. Number one, the market is either committed to this direction and price carries on, at least for a while, or number two, the market is not committed to this move and the MACD rolls back over zero. When you take the hopper trade, you don't know which it's going to be. But when the MACD crosses zero, whatever the market was previously doing, it's over. It's really, really definitive information that's helpful to you, especially when you're in a hopper trade, but really when you're in any trade. So here's a couple of examples of the MACD rolling over zero, sort of nullifying the previous move. We had a hopper to go up in this instance, and in a very short amount of time, the MACD rolled right back over zero, and that up move was over. It's just a done deal. We have something different happening now. And in this example, we had a hopper happen when MACD crossed zero going up, and it just didn't take long at all for that MACD to roll right back over zero and say, if you were buying, that trade is over, get out of it. It's time to close it. It's time to shut that down. All right, so let's talk about the MACD close with the hopper. We can increase the probability of seeing market commitment with our hopper trade with a lot of different things, such as other strategies that we've talked about with the combo hopper, or you can pay attention to scheduled economic events that will get the market moving. Simply the time of day will have a lot to do with the success of your hopper. I like to keep it to the active trading sessions to produce the best hoppers, and that would be the European session and the US session and the Asian sessions. And remember, I'm going to keep saying this until it sticks into your head permanently. When the MACD crosses zero, whatever the market was previously doing, it's over. Okay, it's over. MACD close. MACD says that thing that you were doing a minute ago, it's done. Get out of it. Market is now doing something different. All right, so when the hopper happens, and then immediately the MACD rolls back over zero, going the opposite direction. It's a sign from God. No, just kidding. It's a sign from the MACD that you might want to dump your trade and wait for better timing. And that's not a bad thing. It's a great thing to know, actually. It's the best possible stop loss because it has the benefit of MACD logic. If the MACD is holding its position, and you know, this happens too just as often, and price starts getting really choppy and you're thinking, shoot, you know, should I close this trade? You know, it's not, price isn't immediately going in my direction and things are getting kind of choppy and I'm trying to figure out where to put the stop loss. And if you use the MACD close, I mean, catastrophic stop loss is always a good idea, but if you use the MACD close theory or the button, whatever you use. You don't have to have it be the button. You can do it manually. If you watch and you keep that trade open as long as the MACD is holding that position for you, then it really gives you a lot of peace of mind that you're okay to stay in this trade and to stick it out, even though price is getting a little bit choppy. So volatility spikes and price action are going to trip your stop loss and close your trade if your stop loss is too close, but they have no effect on the MACD. And you'll watch the MACD and how steady it stays even when you get these crazy volatility spikes, you know, up and down around your point of entry, and you're thinking, oh no, you know, what should I do? Should I stay in this trade or should I think about exiting it? And the answer from me comes from the MACD. And if the MACD is holding in there, then I'm holding in there. The MACD crosses zero, it's over. I close the trade. Definitive information. It's excellent. So in this example, just as an example, as long as the MACD holds its position above zero, the market is in position to go long. You know, with price above both moving averages, maybe I have a target overhead for, you know, a possible trade setup. But if the MACD rolls over zero, it's best to just come back to the setup later when the market has better timing. So it doesn't mean the setup's not going to be good later. It just means the market's not there for you right now. And I would rather know that than sit there and wait with it. So in this instance, I have a definitive way of telling if I should think about coming back later, just close the trade down, or if I want to stay with a long position. As long as that MACD is holding above zero, then I know I want to stay in the trade because it can stay above zero and come right down close to zero and then be on its way. And it really held you in that secure position of keeping that trade on as long as that was the best, as long as that was what the MACD was calling for. But if that MACD crosses zero, there's no more to think about. You just know that the market timing's not there for that long move and will come back when the market has better timing. All right, so you know, the MACD close with the hopper, it's not a question of if, but when you're trying to figure out whether or not to hold it or close it, follow the MACD. And I say it that way because it happens to everybody at some point where you're just like, I don't know if I should just close this trade or, you know, stick it out a little longer. And this just puts an end to that agony that we all have felt when we're trying to figure out whether or not we should just let it go a little longer. When the MACD crosses zero, whatever the market was previously doing, it's over. So that's the answer. That absolutely ends the discussion when you're trying to decide about staying in the trade longer or letting it go. All right, so let's talk about the MACD close with a trend trade. During a trending market, the hopper can produce an entry for a move that holds its position for a nice long run. I've also been lucky a few times where I ended up in a trade that suddenly the market was trending in my favor, and I wasn't even thinking that was going to happen. But here I am in a trend trade, and the market's, you know, my trade is already super profitable, and now I can see clearly that the market is in its trend, you know. So here we are. And then sometimes you just find yourself in a trade, you know, and the market is just really moving in your favor. Okay, so let's talk about the MACD close with a trend trade. In these instances, the trader has to decide how long to keep it open, right? That should not be stressful, but it is. You're going to know what I'm talking about, right? Have you ever held onto a trade that was really good, and then you're just like agonizing over, you know, this is so much better than I thought. I should just close it now. And then, you know, the other flip side of that coin is, you know, I'm going to feel stupid if I close it and it just keeps going for 3 more days. You know, like, I mean, it shouldn't be a stressful problem because you're in profit, but it actually is. And you don't want to, you know, hold on to it too long, hoping for more, and then have the whole thing slip away from you. So, I mean, that is the struggle. MACD is here to help you out. All right, so we're talking about MACD close with a trend trade. You'll get some help when you remember what the MACD's job is. I'm going to say it again. Have you memorized this yet? I bet you have. When the MACD crosses zero, whatever the market was previously doing, it's over, right? Now, the inverse of that is, as long as the market move is still happening, the MACD is going to hold its position, either above or below zero for that move. So MACD is producing all the information that you need, particularly in a trend. So the MACD is going to help you call the end of the trend. When it comes to holding a trend, as long as the MACD holds its position above zero for an uptrend or below zero for a downtrend, that trend is still on. When the MACD crosses zero, you can call it done. You can take your profit and call it a day, call it a trend. So how totally awesome to get that kind of definitive information about your trend trade. All right, so the MACD close holds on through the retracement phases. Every trend has retracement phases, but even during the normal retracements, the MACD holds its position. Now, the MACD may come back and come very close to zero, and that's normal. That's what it's supposed to do. As momentum is reloading, and then it's ready to roll out another leg of the trend with new momentum. So even if the MACD is coming towards zero, I don't panic about the trend ending. I just know that every trend moves with this ebb and flow of trend continuation, trend retracement, trend continuation, trend retracement. And as that happens, the MACD line is going to work its way back towards zero and then take off from zero again, all in the same direction of the trend. When the MACD line finally does get back to zero and crosses zero, it's fairly likely that the trend has been showing signs of exhaustion and prices failing to progress those highs in the uptrend or the lows of the downtrend. And that's a really good time to think about taking some profit. So here's an example, and this actually happened. This was a trend trade where the MACD was holding itself below zero the entire length of this pound dollar trend earlier this year. The MACD close kept me in this trade way longer than I would normally do it, and I actually just did it to demonstrate the button, and I was shocked at my own ability to stay in a trend trade this long. But in this example, every time the MACD line came up towards zero, it was just reloading on momentum, took off with momentum on the next leg of the trend, came back several times, and really went on a long time before it finally actually crossed zero, showing me the end of this lengthy downtrend that we saw in the Great British Pound US dollar earlier in the year. All right, it's just one example. I typically don't hold my trades anywhere near that long, but it's a pretty good demonstration of what the MACD can do. Use the button, of course, to MACD close your trend trades, because trends can go on a long time or not. I created the MACD close button to watch the trade for me and close it when the trend is actually over. Finally, definitive information about when to close a trend trade, and I don't have to wait and stay up extra late and wonder if I should go to bed or just close the trade, or if I'm going to wake up and the whole thing slipped away from me. You know, those kind of things just drive you crazy. And you may have noticed that in Forex, for day traders, unless you're holding on to a position for months with, 500 pip stop losses, trailing stops just don't really buy you that much benefit most of the time. But the MACD close is going to be definitively keeping you with that trend trade open or shutting it down. It all depends on when the MACD crosses zero. It just turns out that the MACD close was the first button I built, and it was just for this very purpose. And what I didn't know when I built it was how useful the MACD close button was going to be for all my other trading patterns as well, not just the trend. So the MACD close, here's the third example, MACD close for a profit target with a reverse trigger finger. You remember the reverse trigger finger from a previous lesson. When the MACD line crosses the signal line going towards zero, it's a reverse trigger finger. It's the MACD's counter trend trade signal. All right, so you can review the previous lesson for more information about the reverse trigger finger. If you missed it, you'll find the recording there. The MACD close is a profit target when the MACD line is heading back towards home, back towards zero. So here is kind of what that would look like. When the MACD line crosses the signal line, it's a counter trend trade signal. The MACD will eventually head for its home base, which is the zero level. So the MACD close can be used as a profit target. So this would be our counter trend trade signal from the MACD. We call it the reverse trigger finger, and this would be a sell trade, and it's counter to the previous market direction. sorry, did I say sell? This would be a buy trade. I knew that didn't sound right. This would be a buy trade against the previous downtrending market activity. So it's a buy trade, and the anticipation is that the MACD line is going to make its way back towards 0. And so in this instance, the MACD close can actually be the profit target for this particular trade, getting you the most possible profit when no matter how long it takes for the MACD line to find its way back home, back to the 0 level. All right, so using the MACD close for a profit target with your counter trend trades gives you an opportunity to hold sometimes, you know, for a little bit more on occasion, or just hold for the right amount, you know, with any kind of a swing trade. As long as the MACD is heading for the 0 line and gapping away from the signal line, chances are momentum is in your favor, and the MACD is going to tag that 0 line for a MACD close. It's just a perfect way to end that reverse trigger finger setup. All right, I'm ready for the review. Are you ready for the review? We'll start with the Monday trade hopper. When the MACD hops over 0 at the beginning of a week on a long time frame chart, it has a good probability of holding that position long enough for us to capture 100 pips. That is in general for the majors, and that is in general the conservative target when we get a hopper at the beginning of the week. I call it a Monday trade. Sometimes the market starts a move at the beginning of the week, and there's a lot of follow through on that move well into the week. No matter what kind of choppy price action the market produces on Monday, if the MACD is unfazed by that, holding its position above or below 0, we have a chance to see it and take that Monday trade even on Tuesday morning. So on Monday or Tuesday, we have the opportunity to pick up the Monday trade hopper. If you get a hopper at the beginning of the week on a long time frame chart, expect the market to hold that position for a good length of time. And let's review the MACD close. The MACD close is when the MACD gets back to 0, you close your trade. Super easy, easy breezy. Sometimes it's a stop loss, sometimes it's a profit target, sometimes it's the end of a trend. So I have 3 examples for using the MACD close. MACD close with a hopper tells you when to hold it or when to close it and come back later with better timing. It's a very effective stop loss. It's a very effective stop loss because it's unfazed by little volatility spikes that happen in the market that can slip out and, you know, trip your stop loss, and then the market was going to go in your favor anyway. So holding your position open with the MACD or knowing definitively it's time to just exit that trade, it's not happening with a MACD close. MACD close with a trend trade tells you definitively if the trend is still on until the MACD crosses 0. Right? Nothing holds a trend signal better than the MACD. As long as the MACD is holding its position below 0, we're still in a downtrend. As long as the MACD is holding its position above 0, we're still in the uptrend. So if you're in a trend trade and you're trying to figure out when to close it, MACD close is going to help you find the end of the trend and get out of that trade with the best possible profit without holding on too long. So MACD close with a counter trend trade gives you a profit target when the MACD line gets back to its home base, which is the 0 level. Remember, when the MACD crosses 0, whatever the market was previously doing, it's over. Sometimes that means it's time to MACD close your trade, win or lose. So that's it for the review. Don't forget to check out the button. I created a demonstration video, which you can view at my website, simplyconvo.com/button-fall-sale. I hope you have a chance to check that out. If you have questions, you can send me an email. And coming up next time, we're going to have our final session, session number 7, where we will talk about using the MACD with your other strategies and the granddaddy review. It'll be the Grand MACD review to end the series. I think you're really going to love the review, and I can't wait to share it with you next time. So thank you for joining me live if you're here right now, and thank you for coming to visit the recording. If you catch me a little bit later, you can find me at combotraders@gmail.com, and my website is simplycombo.com. I hope to see you soon. I hope to hear from you soon. Have a wonderful rest of your day. All right, if you're here live, I'm going to jump over to, let's see here. I'm going to stop sharing my screen. You can see me, but I can't see you. And I'm going to go into the questions and comments and see if there's any questions or comments for me tonight. And it looks like there are not. So, so that's That's perfectly fine. Thank you so much for the opportunity for me to share with you my MACD strategies. I hope you have a wonderful rest of your trading week, and I'll see you Monday for our conclusion. Have a great night, everybody.